Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. If you're new to the channel, make sure you subscribe. This is the place to go for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about USDJPY. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect of this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, which are essentially the big players in the market. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see is that at the moment we have just reached a quite strong monthly supply and resistance area. In fact, this zone was acting as previous monthly resistance here, preceding this rejection to the downside. Again, the zone started acting as resistance here, creating this rejection, and at the moment the market is testing exactly the same area, from which there is definitely the possibility of seeing bearish price action being developed to the downside, rejecting this zone. Dropping down on the weekly time frame, what do we see? Now, from a weekly perspective, we can see a completely different scenario. In fact, we can notice how we just got the retest of this previous weekly resistance, now turned support here. And since we have an impulse and correction, if we want to measure the correction, what we have to do is take our Fibonacci from the low to the high of this impulse, which is from this low to this high. And what we can see is that the zone that in fact made the market reject the level to the upside was exactly the area in between the 50% and 0.618 Fibonacci retracements, which was also lining up with the previous resistance turn support, creating essentially confluence of support at this area, which we could in fact expect this market to test and then to start to reject to the upside. Now, at the moment, what we must also notice is that the market is currently approaching the previous high. Now, if we will reach the previous high, this is again quite strong resistance, because clearly a previous high is a resistance zone, so there is a possibility from here to see a potential reversal to the downside away from the zone and the creation of a double top at this zone. Dropping down on the daily time frame, what do we see? Now, from a daily perspective, things get quite more clear. In fact, first of all, I spoke about USDJPY quite a few times in the past. I spoke about it after this W formation. From here, I explained all the reasons for which we could expect first this move to the downside and then the rejection to the upside. Again, I spoke about USDJPY after this correction. From here, I explained why we could expect a potential move higher. And in the very last analysis, after this impulse and correction, I explained all the reasons for which from here we could expect more bullish continuation. And by the way, I will link in description all these previous analysis, so you can go and check them out for more free education. However, in creating this move to the upside, is also important to point out that the market is creating a W formation. Now, in creating this W formation, what is showing the market essentially is that there is very good probability to see a potential reversal lower for the completion of the W formation at the neckline, which is the previous resistance turn support, meaning that if we will go and reach that previous weekly supply and resistance that we have identified at the previous weekly high, at that point there is a good probability from that area to see the market create a reversal to the downside for the completion of the W formation at the neckline. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, and we check the data precisely for the JPY, we can see how in the long term the JPY is getting weaker, going from minus 20k net positions all the way down to minus 61k net positions. However, in the short term, we're starting to see an increase of the net positions going from minus 68k to minus 61k net positions. So clearly we can see how institutions in the long term have been moving to the bearish side of the JPY, increasing their shorts from 42k to 83k. However, At the same time, we can see how in the short term, we are starting to see an increase of the longs going from 7K to 22K, which shows that there is the possibility to see a long-term bearish JPY, as we have already identified. However, in the short term, there is the possibility of seeing strength of the JPY, meaning weakness of USDJPY, because a strong JPY makes USDJPY weak. So there is definitely the possibility for the potential completion of this W formation here on the daily time frame at the neckline. So how we could be approaching this potential completion? Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily time frames, those are the best time frames from a directional perspective, combined with the COT data. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the upside, waiting for the market to shift from an intraday bullish market as we would have to an intraday bearish market. And if the market would shift from an intraday bullish to bearish market and provide to us one of our valid entries, at that point we could be looking for a potential move lower for the completion of this W formation at the neckline. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website. Here, you have the possibility to gain access to my entire courses with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower here, past the testimonials, you will see that there is a special promotion in which you have a huge upfront discount on the lifetime access price of the mentorship program from $497 all the way down to only $97, one-time payment. And as an option, since I have partnered with the forex broker Blueberry Markets, if you open an account with them after you join the mentorship program directly from your student dashboard, you can get a full refund credited back into your trading account. And if you scroll lower, you will see that at the moment there is still time to join before the offer expires and the price goes back to normal. And directly from here, there is the button to join in order to get automatically access with the email and password that you will create during the checkout process. So I really suggest that you take advantage of this directly from here. The link of the website is also in the description, and looking forward to have you on board. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis education and updates for all of you, and I will see you in my next breakdown.